Hello, everyone. Welcome back to another episode of our podcast. Today we have Wayne Daniel on. He's been one of our longest accounts on our system, and he's also a successful agency owner in our business. So today we're going to be talking about different topics such as, what does it take to succeed in the business? What tools should you be using outside of insurance toolkits that will help you succeed? And before we do that, we're going to let Wayne talk a little bit about how he got into the business and how he's found continued success.
Sure. I appreciate it, Joe. I started in the business 21 years ago. I went to Georgia Southern, went to college for business and corporate finance. And when I graduated, I couldn't find a job. And my father-in-law at the time was in insurance, doing final expense and Medicare supplements. So started actually with a captive agency, and then about 6 months in, transitioned over to his independent agency. And I sold exclusively, off of direct mail leads for 7 years myself before I ever recruited anyone. And then got into recruiting under Daniel and Associates, which was really just me. There were no associates at the time. And then, over the years, back then, there was no internet or cell phones like there are today, smartphones, I should say. Everybody had that bag phone that was $9 a minute. So we did a lot of our recruiting, in the office, banging out the phones. And we also sent out, mailers, cards, just like we do to the final expense clients, to the agents that would call in. So spent several years building a brokerage agency, hundreds of agents across the country. And about 3 years ago, we saw that a lot of agents were failing or quitting, right? So we kind of interviewed people why, and we got all these different answers, right? So we tried to put all that together and create kind of a career agency concept. So we have two things now. So we have a brokerage that we've had, forever. And then about 3 years ago, created Core Senior Benefits, which is just a career agency that's basically everything that you need to sell final expense, Medicare supplement, Medicare Advantage, and annuities. We just kind of pay for it all and provide that training and structure for agents that need that. So kind of two different paths that people can go.
Interesting.
And so what we've seen, I would say, at least over the past, I guess what we can touch on first is that, you might say agents, don't exactly fail, which is definitely true, but we've at least seen in our business, there's an uptick in insufficient funds that we've seen of, accounts that have been active for a while canceling because they're leaving the business. And we see a lot of that directly. So how are you guys kind of combating the different factors that have been going on with, increasing gas prices? I mean, direct mail, mortgage protection probably doesn't even exist right now. So things like that, how have you guys been dealing with that?
As far as, we don't do much mortgage protection. We do have a few agency partners that do that. And certainly, with the rising interest rates, where the refinances and new purchases are definitely going down. So a lot of those people are moving more into the final expense market, working a lot off referrals and doing seminars and things of that nature to kind of combat that. But on the FE side, I know gas prices are going up, but when you really look at it, we were talking about this on our call, we were fine with $3.30, but we go to $4.30 or $4.50, and now all of a sudden it's a problem. But on 2 tanks a week in my truck that gets terrible gas mileage, it's a 24-gallon tank, you're looking at $50 extra a week. So when you extrapolate that out, a couple $100 a month, worst case scenario, if you're using 2 tanks of gas a week, you should be in the field 3 or 4 days at the most. It's really not an issue as big as people make it. And I think a lot of that is the media, right? People are, blowing things up and, online and in the media. But from my perspective, a gas price, yes, it's inconvenient. Yes, it costs money, but I don't think it's a deal breaker as far as being successful in this business. Kind of the same thing I feel about rising lead costs. There is a point where it doesn't make sense, but we're nowhere close to that, in my opinion. What do you think, Chris?
I'm curious, what do you think? I think some agents eventually find out they're just not a good fit for being an entrepreneur, being self-employed, and being unmanaged, per se. So maybe they don't fail out. They just find out they're not a good fit. But where is a happy medium with agents? There's the people that are posting that they wrote 500 grand a year, which they probably didn't. Then there's the people that are writing 2,500 a week, and they're happy as pig in slop. Where do you think the happy medium is that an agent should find themselves in for long-term stability?
For most of our agents, if you're writing 3,000 or 4,000 of annualized premium a week, you're a good, solid agent. I know there's times where you're going to have a $7,000, $8,000, $10,000 week, and Chris, I know you still produce at a high level, but there's not many people that produce 300,000 plus a year. It's less than 1%. It really is. And I know a lot of that online is for recruiting, and it discourages a lot of agents because they feel like if they come out of the gate and they're not writing 10,000 a week, they're doing something wrong, or they need to go join another organization. And, we have to explain to them, and I can show the data with our CRM over, hundreds and thousands of agents over time, what they've done. And that kind of gives them a little bit of comfort. But just explaining to people when they start in this business, there's a lot of those multi-level marketing type companies that will try to recruit you. And they're going to show you Ferraris and Lamborghinis and tell you can make $1 million a year. And you can make millions in this business, but you're not going to make it the first year. So I tell people it's not a get rich quick scheme, but it is a get rich pretty quick if you're diligent and follow a good structure and a good plan.
I'm curious, do you think that out of 100 agents that have an insurance license, how many of them have been afforded the opportunity to have a good system, which is like, here's a lead program, here's a presentation, here's a carrier contract, call me when you need help? And how many of them have absolutely no guidance, which I think increases their odds of failure? So like, what do you think the odds are? I
think there's 20%, 20 to 25%. And I try to look at LIMRA for some statistics based on companies that agents are contracted with. So it's not an exact science, but some of these larger organizations use 2 or 3 carriers mainly. So you can kind of see where people work. And I think 20 to 25% of all life insurance agents nationwide are in a system that is weighted towards their success, right? So there's successful people in every organization. I don't care, even the worst ones there are, right? There's people making millions of dollars. So if you have the drive, you can be successful anywhere. But, sometimes the odds are stacked against you. And there's agents that'll do really well in one system and not so great in another. So, I think spending the time up front, one, to make sure not only are you with right upline and organization, but are you going to take a career type path? Because you don't have a savings account, you have no way to buy leads, you don't know what you're doing, you've never done accounting, tax returns, you've never been 1099, maybe you need to go career at least for a while before you go brokerage, or maybe you're an entrepreneur that was in a different industry, you're used to 1099, you're used to being self-employed, you've got 10 grand in the bank, maybe that's more towards brokerage side. So I think spending more time up front, making sure you're in the right system would save us a ton, because our industry as a whole has a bad name because over 90% people fail the first year. I mean, it's crazy. And there's just no need for it. There's too many resources out there, and you guys know what they are, but it's hard because they have to weed through so many solicitations on people that are promising them the world, and it's difficult. It's difficult for them to know which one to pick.
Absolutely. What do you think is a good way to help? I've also found that there's agents that are going to fail no matter what. There's agents that are going to get to a certain point and fail out. Then there's the ones that are going to make it long term. A lot of agents fail. They get a little bit of money in the bank, more than they've ever had before, which probably still isn't much in a respectful way. They've got $5 grand in the bank. They've never had it before. They feel like they've got a general grasp of the presentation, a carrier, lead flow. They think they know it all, but then they still end up failing within that 6 to 18 month time frame due to things like shiny objects, sexier distractions, laziness, a wave of chargebacks they were told to prepare for but never were. So those agents that have the skills but still fail, what do you find? What do you do in those situations?
I think in those situations, I try to hit that up front. So if I see that coming, and you can tell, right, from production, big weeks, and then all of a sudden you have small weeks, you're still taking the same amount of leads, or you start taking less leads. That's where a CRM is super important. And, we tell people if you don't use ours, you need to use someone's, pick whatever you like, especially if you're on the brokerage. If you're on the career, we kind of make you use ours, but knowing your numbers, right? Knowing your close percentage. Everybody wants to talk about premium on Facebook, but really close percentage, number of apps is more important to me. Is an agent better that writes 2 apps a week at $200 a pop for $400 in monthly premium, or the guy that wrote 10 apps at $40 a month? Which one's a better agent? So there's a lot of metrics that you have to look at. It's not just, hey, I wrote 8,000 or I wrote 10,000, but more specifically for your answer, watching the trends. And if they got a big deposit and they start getting lazy, just making sure you create good habits. I tell people it's like working out at the gym. You know, if I miss a couple of days, it's so hard for me to get back on track, right? It's hard after you sleep in for a couple of days to wake up at 5:30 the next morning and have that structure. And, you know, I'm very diligent about it. I have a morning routine, and my agents and agency partners know before 8:30 in the morning, you know, I'm not going to answer the phone. And it's not because I don't like them. It's because from 5:30 to 8:30, I have a process, you know, from working out to when I'm going to eat to what I'm going to do. And I think successful people have that structure, whatever works for them, but they do the same thing every day, every week to be successful.
Well said. Joe, I'll stop hogging the mic for a minute here, and I'm sure you've got some quality content. Questions?
Okay, yeah, I think Wayne's point about being a career agent, something you see on Facebook a lot, especially, is everyone looks down on the W-2, and I'm so happy I left my W-2, and people fail to realize that probably the majority of people, as we can easily see, is not, for a variety of reasons, meant for that. You know, if you don't work for a week, you're not going to get the PTO. You don't have your health insurance if something happens. In general, some people do, but I think there's a lot of, and if you look at the average salary of an agent, you get inflated numbers from every organization, but those never count the people who fail out. So when you look at Primerica's number, everyone makes fun of it, but that's probably pretty close to what, if you took the aggregate of what even the agents who zero out and don't work, whatever it is, that still counts. You take the median, for example, it's going to be around that number. If you, of course, cut those agents out, it's much higher. It might be closer to what they say, but I think there's a lot of unspoken benefits to the W-2 career role, where some people want to take off at 5 and have the rest of their day, or they want to have the weekend, or they don't want to have to be in the car for a week because they got double the leads and they have to pay for more in their area if they're on a standing order or whatever it is. So I think there's a lot of some people like working all the time, and that's great, but others want to have more balance, or don't need to make $200,000 a year. Maybe they're fine with 60 or 70, and I think that's something that goes more unspoken too, is that it's kind of this like open secret that all these 1099 people are failing, but we all think it's so great when that isn't always the case.
That's a great point, Joe. It's not always financial for everyone, and it was for me. So it's very hard for me to realize that sometimes it's not for other people. So, I've had to do that, on our career side. We have a new agent training next week with 17 new people, I think, at our corporate office. I'm working from home today, but in our office, we'll have those people in, and we'll tell them the lowest person makes $62,000 a year currently in our agency, and the highest is like 110, right? Nobody's making $200,000 or $300,000 in that environment, but they're working 3 days a week, right? So they're working Monday through Wednesday, maybe on a Thursday if they're new, but they have Friday, Saturday, Sunday off. Where else can you work, have 3-day weekends, and make $70,000 a year? That's a great living for most people. And I forget that because that wasn't my path, but it doesn't mean that it's not for someone. So, realizing that you have to have that, for me, it was save up my money, go buy leads, be an entrepreneur, create a big business, but not everybody has those same aspirations, and that's okay. You got to have a system that works for everyone. And this one certainly provides a work-life balance. I was the guy that wanted to go bang out there 5 or 6 days a week so I could, build my company, but not everybody's like that. And that's okay. Got to have different strokes, different folks. And when I said people don't fail in this business, Chris gave me a look, but I feel like people just quit, and they quit too early. I think that with good systems and good training, good structure, good leads, whether that's Facebook or direct mail or telemarketing, you could argue which one's the best. I tell agents, try them all, see what you like the best. Just because direct mail was good for me doesn't mean it's going to be good for you. But most of our agents like the direct mail, and we're able to get it at a larger level. I think a lot of people are talking bad about direct mail and that it's dying just because you have to have money to have a direct mail program, right? If you're either going to just send your agents to need a lead or whatever the case may be, you can send them to one of these lead vendors and they're great, but you're waiting 3 or 4 weeks. You're making a large order. You hope the leads come in. You have to consistently do that, where we have a leads on demand system where, they're $32 a piece. If you want to buy 10 of them or 100 of them or 20 of them, you go in our system and buy them. Some agents get 20 or 25 every single week. Working for if that's the route you want to go, work for one of the larger organizations that can offer you that just to be successful, because, slinging a contract, and nothing wrong with this, but people that are starting in this business that get a higher contract or negotiate that, try to get agents under them. And and no offense, but they're sitting in their apartment with no CRM, no training systems, no lead programs, anything. They're slinging a contract using their upline insurance pay and going, hey, I'll work with you on the phone a little bit. I may do 1 day or 2 days of a ride along. Call XYZ company, get your leads. They're trying to piece all these systems together. And there's too many organizations, not just mine. There's dozens of organizations across the company that offer a better system than that with the same compensation and everything. So that's, again, goes back to do your due diligence up front, because sometimes, getting releases are difficult, especially from some of these MLM organizations. So make sure you pick the right fit for you out of the gate and interview them. I always tell my agency partners and the agents in our career program, I work for you, right? My job is a support role at this point. I go out and do beat the boss sometimes and work leads, because I think it's important that everybody knows from the top to the bottom. We can all knock a door or give a presentation, but at the end of the day, I don't work in the field anymore. Those are the people that make everything happen for everyone. So it's my job to support them and not the other way around. They don't work for me. So
I agree. I think agents quit right before they make it to their biggest breakthrough. It's like that picture we've all seen on Facebook of the guy that's trying to punch through the diamonds and he walks away right before he gets it, and the one that's made it. I'm sure there's been plenty of times in like 2019 where Joe's like, this project is way too much effort. I'm going to go back to giving away free Medicare things that people don't have to pay for. And could have easily come up on Toolkit before it ever existed, or the first time that a product changed and you had to redo the entire thing. There's plenty of opportunities to quit, and failure and quitting, are just kind of progressions of each other.
Yeah.
In this business, you don't have to be talented. You don't have to be good looking. You don't have to be Tony Robbins. You just have to go out there and put in an average American work week, and you'll get results 10 times better than most other Americans out there. And I remember at a convention, somebody saying once, never to measure your success against somebody else's. Like Joe said, maybe you're perfectly satisfied making 65 grand a year, not having a boss, and being able to go on vacation without asking for permission. God bless you for that. Maybe you want to make 600 grand a year and work 6 days a week for 6 years to get there. That could be your choice as well. But if you're watching the video, don't feel like you have to be exactly what the person on Facebook tells you to be, because as Ben Bowman would say, most of the people are probably frauds anyway. You just don't know it.
Right.
Yeah, I think that the problem is using money as a measuring stick for success anyway, because we look on Facebook especially, it's people posting what boat they bought this week or what car they bought. Everyone wants the massive mansion. And when you look at the happiness metrics, I'm sure it's changed since this survey, but it was 77,000. Once you go above that, Jeff Bezos is no happier. I mean, I'm sure you can be less miserable on a jet ski than you can be not being able to pay your electric bill. But once you hit a certain point, there's no return unless you really want something above that. So I think you shouldn't look at the business and think, I need to make $1 million. Maybe you want to make 75 and go build model kites all weekend. And that's really what you want to do. So it doesn't need to be, it can be a means to an end of something else you want to do. You don't need to, because like Chris said, it's most of these people aren't making anything near that. There's chargebacks, there's lead costs, there's people who are posting their AP and they're maybe at a 40% contract. It doesn't matter what it is. It's not always true, but it doesn't need to just be money. It can be, sending your kid to college or something. Like it doesn't, I think I've always disliked that about the business of people just strictly making it about, this is what my override is, this is what I can buy. It doesn't need to be about that.
And to your point, these 1099 guys, their income is always what their 1099 says. It's never the net after lead costs and fuel and depreciation or car payments, whatever it is, CRM expense. It's not EBITDA, right? It's the gross revenue number. They're like, I made $1 million last year, and they show you 5 1099s. Well, you didn't make $1 million. If you spent $500,000 on leads and the other guy made $1 million and spent 200,000, who's in better shape, right? On Facebook, you made the same, but in reality, you didn't. So, it's important that people are aware of that too. When they're showing income numbers, that's truly what it is gross income. Where on a career side, I tell them, yeah, you're not making 150, but you're also not spending 60 or 70 grand on leads or hotel costs or meals or any E&O insurance, everything that we pay for. So their number is really a net number, right? So it'd be hard for them to compare someone that's on a 1099 that's showing the largest number that they can show. Which is, human nature, right? And part of the recruiting game. And I get that, but that's what hurts new agents is they just see that and they go, that's what I want, right? I see what Chris is offering and that's what I want. And Chris is an honest guy, but a lot of people out there aren't. And, they latch onto someone that thinks that they think have the success that they want. So, and then they get locked into a system that may not be the best for them. And then it's tough to get released and move on. So, because we find people do their due diligence after the first bad experience, right? They don't do it up front. They get somewhere that they hate, and then they figure everything out. And it's like, figure everything out first before you sign contracts.
I think also, too, the last thing I'll probably want to mention here is that people don't always recognize or realize that you're in a business relationship with your upline, your agency, your IMO, your downline, whatever. You're in a business relationship, and relationships have ups and downs. You know, maybe somebody hasn't been in a, you know, other relationship to recognize that, but there are going to be good days. There's going to be bad days. There's going to be days where you want to take them aside and regret the decision. I'm just saying, it's not always going to be good. And when you recognize that it takes time to build a relationship, work through up and down, have highs and have lows, eventually you build long-term stability in whatever relationship you choose. Now, I gave a talk once about planting seeds and how sometimes, you know, the seed never gets a chance to grow roots so that you can grow tall. If you're constantly jumping from one place to the next, you're only ever going to reach so high in your growth. So just recognizing that relationships take time. You're not going to get along with everybody every day. And anyone who ever gets far because they dug in deep in that situation. Again, Joe, a year ago, didn't even have MedSup in the toolkit, dug deep, put a massive amount of efforts into adding that into the product. And if he'd have just been satisfied with this, he'd never see this level of growth. So longevity means a lot in this business and relationships.
Yeah, I mean, I still call it FX toolkits because that's what you called it in the beginning. Right now, it's insurance toolkits. You have all these. I mean, you have dental, vision, everything on there, and you continue to innovate, and that's why, you know, we're happy with the product. And you've seen that some of our downline agencies, you know, we kind of put an incentive program if they write a certain amount of business that we'll pay for their agency license and their downlines, and it works well because we can brand it to their agency. It's not Allegiant Wealth Group. It's not Core. You know, and they like that. It's another value add that I can add as an upline to some of these agency partners that other people aren't doing, or at least not at a high level. So, you know, we appreciate the partnership, and I love that you guys are always adding stuff all the time and making it easier for the agents to use, because that takes a lot of the training aspect of carriers off of our plate. And when we were doing classroom training, you know, 2 whole days of the week was spent just going through underwriting. And, you know, we still hit on that stuff and where to find that information, you know, in the underwriting guides, but we don't have to spend as much time going through specific drugs that are kind of, you know, normal in the final expense industry that we see, you know, for COPD or heart meds or whatever the case may be that we see all the time. We can tell them, you know, plug it in the toolkit and go, and you're off to the races. So it's really been helpful for us as far as part of our training process. So we appreciate the partnership.
Yeah, my last point will be to, you know, even 3 years later, we're still working on, you know, MedSup and adding other products. So it's just like being an agent. It doesn't stop. You don't stop learning or trying to acquire new skills, or, you know, it's not all going to work out on day one. Because if we thought that, we'd be, you know, not in the best position. If in any position at all, it probably wouldn't have worked out. So always keep continuing to improve your skill set. So thank you to Wayne for joining us today. And as usual, if you guys have any questions, you can send them a comment down below. And Wayne is accessible on Facebook, I believe, is the primary. Yep. So Wayne Daniel, if you guys want to connect with him. And we appreciate you watching.
Thanks, guys.
Thank you.